Think about this in your own lives. How many times out there have we been on our high horses thinking we are the best, we're unstoppable, and then what happens? Some curveball comes into our lives and it throws us off. And that's where the markets are right now. They're in extreme greed, where we're at a point where the investing public thinks nothing can go wrong, and ultimately that's exactly historically, and this is going to historical analysis now, that's exactly where things go wrong.
The past week has been marked by significant developments in the cryptocurrency landscape, with the SEC filing lawsuits against two prominent exchanges, Binance and Coinbase. These actions have sent shockwaves throughout the industry, resulting in a swift downturn in the crypto markets. The trading range of $27,000 to $30,000, which had prevailed for some time, now faces new uncertainties. The threat of a commercial real estate market crash is hanging over the already fragile U.S. economy. About $1.5 trillion in commercial mortgage debt is due by the end of 2025, but steeper borrowing costs, coupled with tighter credit conditions and a decline in property values brought on by remote work, have increased the risk of default. Fitch Ratings already estimated that 35%, or $5.8 billion, of pooled securities commercial mortgages coming due between April and December 2023 will not be able to be refinanced. Commercial real estate is melting down fast. Tesla's CEO Elon Musk said in a recent tweet, "Home values next." Those who have been following Gareth's previous streams are aware of his bearish stance on cryptocurrencies since their recent peak. However, fear not if you missed out on his earlier insights in this video. Gareth is poised to share his latest analysis and predictions for what lies ahead. He will delve into the market's top movers and present a compelling argument regarding the potential topping out of the stock market, real estate crash, and what is next for cryptocurrencies.
And the problem is that what we know is the Fed continues to probably raise rates later this year. Yes, they will likely pause next week, but they also have, so the government, and check this out, this is not being talked about yet. In the next 3 months, the government will have to sell $1 to $1.5 trillion in bonds to the world. All right, now you ask yourself this. Number one, what interest rate are they going to have to do? Essentially, this is debt that's going to be rolling over, that they have to essentially refinance. So you're taking debt that was probably at a 1% to 2% interest rate. You're now looking at selling it to the public or to the world at around a 5% interest rate. So think about the U.S. deficit and what that's going to do to the U.S. deficit. By the way, there's a reason why when they passed the debt ceiling, there's no cap on it right now. For the next 1.5 to 2 years, no cap whatsoever, because you have all these factors here going on where they have to unload a ton more debt to keep the merry-go-round going. So now you're talking about how much is going to be sold to the world, and then what interest rate is that going to be at? And again, is that a headwind? Well, I would think so. Then you take into account, and I had a great Spaces last night, verified Spaces, by the way, every Tuesday night at 7 p.m. We had an amazing group of experts on last night. We were talking about the commercial real estate market and what a massive, massive collapse that could be. So ultimately, that's coming later this year. We know the banks are already stressed. We know banks have failed already. Now you throw into the mix the commercial real estate crash. Now you go back to the Fed saying, hey, listen, you know, we're going to have a mild recession. And I said this before when they said this. As soon as they say mild, I get scared. I get scared because every time they say something, it's never what they say. It's always worse. You know, you could go back to 2007. Oh, it'll be, you know, a minor correction. Real estate will correct. That's fine. Well, look at what happened. The Great Recession. We had massive downside in the markets, collapses every which way. You go back to transitory inflation. What did that turn out to be? So everything they do, there's always this miscalculation. Whether it's hopium on their part or not, it's miscalculated. So you have to say to yourself, all right, if we are going to continue to see this economic data, now jobs have been staying strong. That's the one positive in this overall picture. But the other side of it is the other economic data is absolutely weakening. So again, when all is said and done, you look at the second half of this year, I have it priced in number one. By the end of the third quarter to fourth quarter, we will be in a recession. The stock market by the third quarter, which we're getting close to, right, will be putting into an effect essentially where we're going to be, the markets, the stock market will start to price that in. All right, all it's going to take, especially with the VIX at these levels. In fact, let's go back to the charts. I want to show you this VIX. All right, we're going to look at this. All right, so if we go to the CBOE Volatility Index, the VIX is trading at 14. All right, basically touched 13 this morning. If you go back in time, we are still at the same levels on the VIX that we were in 2021. Now, to me, this is a negative divergence. And you say, well, why is this a negative divergence? And the answer is this, and think about this, right? The negative divergence is that people are acting like this is a new bull market, but we're not at all-time highs. So last time the VIX was at 14, we were at all-time highs, crypto was at all-time highs, the stock market was at all-time highs. Now we're basically at those same levels on the VIX, but the markets are lower. Again, that's a negative divergence. So that has me concerned as well. It's essentially people being as euphoric as they were at all-time highs, but we're not at all-time highs. Essentially, people are getting conned into this belief by the psychology of the market.
During the credit crunch, banks significantly raised their lending standards, making it difficult for businesses or households to get loans. Borrowers may have to agree to more stringent terms like high interest rates as banks try to reduce the financial risk on their end. Banks were already tightening lending standards before the crisis within the industry began. A quarterly survey of loan officers published by the Fed showed that a growing number of banks tightened lending standards and saw a sharp slowdown in demand. Even before the collapse of Silicon Valley Bank and Signature Bank in early March, the commercial real estate market was struggling with a number of challenges, including higher interest rates and waning demand for office space as more companies allow employees to work from home. As we get back into the video, Gareth makes a bold prediction for Bitcoin's next price and also talks about the SEC's recent suing of crypto giants Binance and Coinbase.
And so you have all these people talking about deflation. That's not going to happen. And I'm going to tell you why. It's not going to happen because the reason people are making more money is because the general wage got raised. We know people that were making $12 went to $25 per hour. All right, that is going to be sticky. You can't start reducing people's wages. Once you set them at $25 an hour, you can't bring that down. That's going to keep inflation sticky north of 3%. With it north of 3%, ask yourself this: when the heck is the Fed going to cut rates? How can they cut rates? And you might say, well, oh, they could cut rates, no big deal. Well, if you're at 1.5% and you raise and inflation jumps to 9%, now if you start at 3, where is inflation going to top out? 15%? How are we going to feel about that? I don't think the Fed wants to do that. They're going to be very reluctant to lower interest rates. Now, right now, markets, are they pricing in anything like this? And the answer is absolutely not. All right, so those are a couple things. Now, I want to get to Bitcoin, right? I want to talk a little bit about Bitcoin here. Bitcoin having a beautiful reversal yesterday. So essentially, you have to understand the metrics going on. 2 days ago, the SEC sued Binance, and they levied some really serious accusations. If these accusations are true, that's cataclysmic for the crypto markets. Now, what I find fascinating here is you essentially have a market that yesterday rebounded and negated that move. Now, to me, this is an interesting dynamic, and I'll tell you the dynamic that honestly makes me intrigued, is that you have a crypto investing public that essentially is saying, no, we don't believe. The SEC has lost credibility to the point that when they say that Binance was doing shady things with funds, we're not going to believe them. Because if this was true and Binance ultimately collapses, the detriment to the crypto markets would be massive. All right, so you have investors that are coming in and saying no. Now, granted, yesterday the SEC sued Coinbase. Now, remember, there's a difference here. The Binance stuff, the allegations were really bad. Coinbase, the SEC was just saying, hey, you're allowing people to trade unregulated securities. That's nothing new. We knew that already, right? The SEC had already said that, hey, listen, the crypto, everything but Bitcoin's essentially a security. Okay, well, if they already said that, then yeah, you're right. Coinbase is letting people trade unregulated securities. So I think that's one of the keys, is also when people started to realize that, that's when they got to a point where they said, all right, shorts started to cover, you saw a little push up, and now we're popping up. Now, as I take a drink here real quick, and it's not vodka, by the way, it's actually tea. But if we go to the charts here, what I wanted to talk about here is the chart basis. What is the chart telling us? Because that's all news. And you guys know, yeah, I pay attention to news. I think even technical analysts and technicians need to know what's going on with the news. But what we need to do is say, what is the chart telling us? And the chart's very simple. The chart is saying that right now we are holding this area of support. And I want to draw a trend line in here. As long as you hold this general area, and if I put a line through this low right over here, we can clearly see that we closed that down day on Binance right at that level. We then rallied back up. So we're stuck between a range. Now, this is your upside resistance, very clear right here. This is your downside support. If support breaks, we're going to 24,000. That's your next target.
On Monday, after months of discussions, threats, and warnings, the U.S. Securities and Exchange Commission, SEC, aimed the most powerful force in the world of cryptocurrencies. The U.S. financial watchdog accused the crypto exchange Binance and its founder Changpeng Zhao of operating a web of deception, charging him and his exchange with 13 offenses. Binance handles billions in investments for many everyday investors, but the effects are likely to stretch far beyond the cloistered online world of crypto. The company sponsors the Italian football team Lazio and the Argentina national team. It also sponsored the 2021 Africa Cup of Nations tournament. It has also extended its interests with venture capital investments as well as a $500 million stake in Elon Musk's Twitter. The SEC appears bent on a wider crypto crackdown prompted by the collapse last year of the Bahamas-based FTX, whose founder, the U.S. national Sam Bankman-Fried, has now been charged with securities fraud, money laundering, and other offenses. On Tuesday, the SEC accused another crypto platform, Coinbase, of putting customers at risk by operating as an unregistered broker, exchange, and clearing agency. Among the central allegations from the SEC is that Binance and Zhao failed to truly split the U.S. company from the U.S. exchange that it was spun off from. Binance US says that from 2019, its customers were restricted from transacting on Binance.com. However, the SEC alleges that in reality, Binance and Zhao subverted their controls to secretly allow high-value U.S. customers to continue trading on the Binance.com platform. The SEC alleges that while Binance publicly claimed that Binance US was a separate independent trading platform for U.S. investors, Zhao secretly controlled the U.S. company behind the scenes. The pair of enforcement actions suggest the SEC has decided to take broad aim at cryptocurrency firms it sees as bypassing regulation, either by blurring the distinction between on- and offshore services, as with its allegations against Binance, or by trading unregulated securities, as it alleges Coinbase has done. At the heart of the issue is a more fundamental question. Are cryptocurrencies something truly new, which needs a unique regulatory regime, or are they simply digital versions of pre-existing financial instruments which the SEC already regulates? The agency believes that a good portion of the industry is the latter and is seeking to ensure that crypto companies either comply or stop operating in the U.S. We would love to know your opinions regarding the SEC's recent crackdowns and what it means for the crypto world. Feel free to share your opinions in the comment section below. Also, don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.